Hey guys, welcome to another edition of Tones of Trading Bitcoin. I was going to say market analysis. Man, I haven't had that podcast in a while. Trading Bitcoin. The last one, I'm actually I like doing these with guests. I know I've done a lot of these by myself. The last one I did with Tyler Jenks. And this time around, I've been trying to coordinate with Nick Core. We did one episode when I was in Miami, and been trying to coordinate with him again in order to bring him back. And I finally did. So here we are. So Nick, go ahead and say hi to our people.
Hey guys, how's it going? Glad to be here, of course.
All right, how's your trading been going?
It's been going well. It's there's been a lot of I guess I should say moves that don't make sense, rallies in particular. I feel we're just at an unhealthy level, so it's been very limited as far as like, I've been getting stopped a lot on some of my day trades, but then again, I open 40, 50 trades a day, it seems. So
you open 40, 50 trades a day?
Some days when I'm sitting here right in front of it, yeah, I will channel trade down on
what candles are you trading when you do that? Like 5-minute candles? 15-minute candles. All right, gotcha. And what are you focusing on these days? Mostly Bitcoin up and down, or you got like a screen full of altcoins?
No, definitely Bitcoin. I like leverage trading more than anything. That 50, 100% that everybody's looking for with altcoins can be achieved with leverage trading. And so prefer to focus on leverage trading.
So what's the percentages? So basically, like in the last 7 days, would you say 90% of all your trades were Bitcoin?
Actually, all of them were.
All of them. Oh, wow. Okay, cool. When was the last time you traded an altcoin?
It's been a while. So as far as like a swing trade, I would say it's the last run up on Stellar to 90 cents. And then I had bought them again 60 cents and sold like 40 or so. So yeah, it's been a little while. It's been a few weeks for sure.
All right, cool. All right, guys. So we're gonna jump right into screen share. Let's take a look at the charts and take it from there. All right, so I'm gonna do mine. Please check out my work, tonevase.com, and Nick's contact and Nick's Discord and his Telegram link. All of those are in the video description. So you can open up the video description and you can grab all of Nick's information. On my site, tonevase.com, we just added the Learn Trading section. I am going to go through this and I'm going to add a few more, very helpful tips. It's mostly just links. Now that I got reformatted from Liberty Life Trail, like, wow, did I really write that little? Because this took me a couple of days to put together with all the links. So I will be bringing you more information. And my workshops will be in Dublin. I fly out on Thursday. I'll be teaching a workshop there Saturday. I'll be speaking at the Money Conference the following week. Max Kaiser is going to be another speaker there. I know that. The following weekend, I am in London. And the weekend after that, I will be in Montreal. And also, if you guys like my work and you like supporting my work, please check out the affiliate section of my website. And there it is. So if you Bitcoin Live, I'm sorry I couldn't join, but the content there, I haven't had a chance to look yet. I'm hearing very good things, and I'll try and check that out this week myself. So it should be good. All right, let's get into the charts. All right, guys, here's my weekly chart. And as I go through these, I'm going to actually get Nick's take on what I'm saying as well. Nick, just keep in mind that I'm getting some feedback from you. So if you are, you can also mute as well, but just keep that in mind.
Right. No, actually, they were complaining they couldn't hear me. So I had plugged in an actual microphone. Do I sound all right now?
Oh, wait, you guys couldn't hear him? Let's double check that.
Yeah, they said they couldn't understand it because the audio was bad. I don't understand. I don't know how it's doing now, but I plugged in a new microphone. Sorry about the background noise.
That's strange because I hear you fine. Oh, yeah, people are saying much better. Excellent. Okay, cool. Right. Yeah, so we're all set then.
Great.
Perfect. All right, Nick. So I've been, you can see my screen, of course, right?
Mm-hmm.
So I've been comparing the current situation in Bitcoin to August of 2014. I don't know if you've watched my videos recently. I've already been doing this for a couple of weeks. And the reason why I've done that is because 2 weeks ago, we had a big red candle that closed below the 50-week moving average. After things got rejected by the 30-week moving average back in 2014, it occurred in June, and this time around, it occurred in April. So because it occurred earlier this time around, the 30-week moving average never had a chance to fully go all the way around and cross the 50-week as the price was dropping below the 50-week. So the only difference between these charts, as far as I can tell right now, is the fact that we are falling faster than we did back in 2014, which, I don't know, could be a good thing, could be a bad thing. The jury is still out. But this looks very similar to me. The week after the big candle that took us under the 50-week moving average, we had a pretty volatile, slightly bullish week. We had the same exact thing last week, stayed under the 50-week moving average, and we're now working on a bearish week. And remember, back in 2014, this went on for 6 bearish weeks in a row, taking us significantly under the 50-week moving average. So we will see what happens going forward. That is my general weekly outlook, is that we are still repeating 2014, only it's happening a little bit faster this time around. Your thoughts on the general overall trend? Are you still bearish based on weekly candles, and what are you thinking?
Yeah, there's just too much data on the higher time frames to ignore as far as being bearish. I'd like to believe we're bullish, but there's just heavy sell signals that are indicating we are still in a bear market. You mentioned the 50-week moving average and the close below that. Yeah, I actually am in agreement with you there. And I did actually mention the last time we'd done that, which was in 2014, and similarities. There's been several ideas on TradingView that I've shared that basically mirror what you just said and how unhealthy this market is, and the comparison to that market and this market, and the fact that we had closed below it early. So yeah, I actually do mirror that same view. When we get a minute, I'll pull up some charts when you move on to that.
I mean, you can pull them up now. I mean, I have not. If you want to do like a more bigger scope thing, I can stop my screen share. You can jump on yours if there's anything else you want to say. Because after the technical stuff, I want to briefly talk to you about what you're thinking on the fundamental side of things, because everyone has been yelling at me, telling me that I don't understand the fundamentals of Bitcoin, even though I rode the 2014 market all the way down. Not to mention, you know, I literally lived through the 2008 bear market from a company that went down the bear stearns because of that market. So like, I'm not new to dealing with bear markets, and the fundamentals, people are saying, I don't understand the Bitcoin's fundamentals. So I thought maybe you can comment on what you see in the Bitcoin fundamental realm, and why people that think it's so grossly bullish just perhaps aren't thinking very clearly.
Yeah, we can touch on that, most definitely. So as I was mentioning on the 50-week moving average, this was, I don't know how many days ago, a couple weeks ago, but we sit right below it, and this was actually the wrong idea that I'm talking about. This was worrisome to me because we had closed the prior candle below that and then opened up a.
What's the date on that chart? That's probably where we should start.
This was June 3rd. So
gotcha. Okay, cool.
Just a couple days ago.
Yep.
And that weekly it opened up not the way I wanted to see it. I think we ended up. I would have liked to see a break of the weekly 50-period moving average. Anyway, go ahead. I didn't have the chart I was looking for right there.
That's what happens when you post too much. I have the same problem with my videos. I'm like, oh, I just discussed it recently on a video, and they're like, oh man, that was like 5-7 videos ago. I have no idea where. My videos are too long. I have no idea where in the video. So yeah, I have the same problem all the time. That's all right. We can just go back to my chart, and I can zoom in. So basically, when you tweeted that out, that would have been pretty much June 3rd would have been the start of the current candle. This candle here, but actually no, it wouldn't have been. It would have been the end of this candle here.
Right. That was in anticipation, I believe, that idea of the close. That was it was a bullish candle, a positive candle, and we were going to close below it. And I was talking about the pain.
This candle was a complete back test of the 50-week moving average. Now, normally, this should have gone lower and probably came all the way down to 6,500, and then it would have been a much cleaner test back to the 50-week moving average, just like we had a very clean test of the 30-week moving average after bouncing off the 50. It would have been 6,500 has been established as support. Support that's meant to be broken, in my opinion, but support nonetheless. And had we gone all the way down to 6,500 last week before bouncing back into the 50-week moving average, it would have set up a beautiful descending triangle. Now, because we did not do that, we are setting up a symmetric triangle, which I happen to have drawn on the 12-hour candles, not daily candles, because my daily chart is just a little too cluttered. So I put it on the 12-hour candles, and I wanted to draw the descending triangle using 6,500 as horizontal support, but I was almost forced to draw the symmetric triangle based on the fact that we bounced off of 7,000, prior time bounced off of 6,500, and prior time bounced off of 6,000. Very clean. On the upside, we bounced from 12,000 a couple of times. Then we bounced off of 10,000. Do you think the Bitcoin has the mustard to get us back to the top of this symmetric triangle using daily or 12-hour time frame?
So I do think it's possible. Let me share mine real quick. I do think it's possible, but I think we need to retest not only 7,300, but potentially our bottom support on the bottom of the symmetrical triangle. I don't.
Oh, wait, but did we just test it like yesterday or like 2 days?
Yeah, but I think we need to retest it again because this rally off of it was just too rapid and uncomfortable for me. I'm seeing a lot of signs that still remain bearish, including heavy sell volume on the CMF, as can be seen here. Now it is subsiding, but the last time that let me turn off some of these indicators. The last time that we had this heavy of sell pressure, especially at support, it's been a while.
You can also just double click on the CMF and make it big.
No, I know, but I wanted to show the,
with the price. Yeah.
I wanted to zoom back and show everybody. I mean, this is our sell pressure currently as we sit on support. That's not a good sign. If we look at when we wicked off of 6,000 where this started, we were in the positive with the CMF at default settings. We were in the negative on the last support touch, but not as bad as this. The last time it's been this heavy, I mean, we had a heavy spike down there, and you can see it's a gigantic sell-off when we were below 1,000. It's been a while since we've seen this heavy sell pressure. Clear back here, which was at the bottom of our market.
That was a lot bigger than that, right? Like this to me feels like the one right before that, or maybe even the one, like it feels like the June down spike of the CMF, not the one in January. I think the one in January is what we're waiting for to hit the bottom.
Yeah, but my point is, it was on February. You're talking about the one February 5th, right?
No, I'm talking about back in 2014, right?
2014. Yeah,
if you go back to 2014, the current CMF reading does reminds me more of the June 2014 area than the January 2014 area.
Of June, huh?
Well, I'm sorry, not. Yeah. Also, like oh wow, it looks a little different now. Zoom out a little bit. Like make it like, yep, perfect. Oh, Too much. Yeah. Right. So not the January stuff, but yeah, right there, like where you are, but before that, earlier than that, a little bit, like before that down spike.
So here you're talking?
Yeah, like that one. Well, the CMF going down. It's hard for me to. Yep, that one.
Yeah. So yeah, we very well could be. I mean,
or the one after that. But basically, what I'm saying is the big downturn of the CMF. If you move the chart over so people can see the 2014 bear market and the current one at the same time. Yep, like that, right? So look how much worse the CMF got when the price finally bottomed, and we're not even close to that yet. And I do think that's coming.
Right. The only difference between that market and this market is we had some black swan events, namely Mt. Gox, that created a little further sell-off than we should have had.
Well, right, but Mount, I don't think Mt. Gox had anything to do with the second half of 2014. Like that black swan was already over.
Right, but it put a bad image on Bitcoin at the time, and any kind of new money coming in at the time, which wasn't much, especially compared to now, was definitely not about to enter back into it. And so I think because of that, we had a little bit of a prolonged sell-off. If we're going by this fractal back here, I mean, we've still got a ways to go, but there is very close similarities on not only the structure of it, but also our indicators. I know seeing this heavy of sell pressure as support worries me, especially considering that, we popped up pretty hard off of that. It was very unnatural in my opinion. I think if we are going to rally up.
See, I don't know if I agree with that. I don't think that doesn't look like a big pop to me, right? Because look at the previous two pops off of your red line. They were significantly like bigger and stronger, certainly in terms of price. The current pop just doesn't look strong to me at all.
Yeah, market sentiment still, even in just going back the last 2 months, was different. I mean, you take a look at the CMF here, we were positive, but yet we dumped all the way to 6,000 in a heartbeat. Over here, we had came down, tested it right here, popped back up, which is what we did there, but that was only over basically.
Oh, you want to see more than one touch of that line in a vicinity of a couple of weeks so you can get that divergence to judge.
Right. And you originally asked, how I see us hitting up there to the top of our symmetrical triangle. And that's why I feel we need another retest of some.
Right. So you want to see it come down to 7,100 as the CMF builds some momentum and maybe goes back to zero. And that should set up an environment for us to move off of that line the second time around, basically into the end of June, into early July, to hit that line at 8,300.
Yeah, if we're gonna rally up to the top of the symmetrical triangle, which will probably be around this time, it can't be rapid like this. If we were just to continue this straight up, that's too early. That's an unhealthy market. That's an overbought market. I think we need to gather some steam and very steadily creep our way up.
I see. So you're comparing the current pop to the pop in very early April, like April 3rd, and then we came back down.
Yep. It's the same situation is what I'm saying is we came up too fast, got an overbought situation, had to come down, retest, gather some steam.
Yeah, but you see, like to me, this would have been, and probably to you, look how tricky it would have been. The second back test of that red line, which probably didn't even exist at the time, it came with a lower CMF. So there was nothing in the CMF that would have helped you get that second bottom. Am I wrong?
Well, we came down and tested support. If we take a look, just going only off the CMF, I definitely used other indicators on top of this. But so when we touched originally at the bottom there, we had a pretty big spike on the CMF downwards. Come back to retest it. At the time, we were positive, but then we created a nice bullish divergence here. If we go straight up, mostly it was in relation to this candle right here.
Right, but wouldn't that candle have scared you out of your bullish positions? That red candle.
No,
that one.
The seasoned trader in me would have seen in 2 candles we popped up that high. We did the same thing over here and created another overbought scenario. I would add to a position here as it started to subside. I mean, in a sense, we did create a bullish divergence here. Buy pressure began to raise, and our price was going down, and that's why.
No. I mean, you did create bullish divergence on like a 2 to 3 day area, but if you take that 2 week zone into account, there was no divergence in that case, right? Like the price was higher in mid-April than early April, and your CMF was significantly lower.
So I missed the first part of what you had said there.
You changed time frames.
Right, yeah, because I wanted to point out something. So on the daily, we saw a totally different CMF.
Right, it looks very different here. Here, it looks like beautiful divergence.
Right, and that's why I wanted to expand on it to show it. You know, this coming down right here, starting here at, what were we, 74.50, coming to here. Just watching the CMF alone would have told me that we were going to hold support, and that was a good place to either add to a position.
No, the CMF on a 12-hour chart looks beautiful for a rally.
Yeah.
Very different than the daily.
Yeah, and that's why you want to confirm with multiple time frames. The daily is going to show you one thing, but to get, especially with volume, if you want to get an expanded view on the way that volume was actually working, then work your way down the time frames, which is what I do when I see something on another time frame. I mean, taking a look here at the 6 hour now, we saw the heavy sell-off here, and then a good little spike, and then I mean it fell fairly uniform on down to that, and didn't really spike down too far. Right around there is probably where I would have taken a look at opening a position to go along on that, especially. Right.
But if we look at it at the current situation with this time frame, or maybe you can go back to the 720, it doesn't look that bad here either, right? Or you still want to get that you don't, it's already like notching into the positive land here, but you don't think the drop yesterday was big enough. You wanted it to go down to 71.
Yeah, so I mean, it does look healthy here, but one thing with the CMF is you get these little spike ups that don't really mean anything. What I like to look for is if I'm basing things only on the CMF, is a general trend there. For instance, on the daily, just take this little notch that we have here on the CMF out of it, and you can actually see a fairly clear trend. That notch was just the way the indicator works. And it was reacting to the one bullish candle that we had right around here, actually. Yeah, that candle. Buy pressure was pretty heavy, but we got into an overbought situation. We continue to rise, and now we're back down, testing that support. Again, I still think we're overbought on the smaller time frames right now. I mean, just taking a look at the hourly, we can see the CMF pressure has dropped significantly, and there is also multiple divergences showing on this pop-up right here. There on the OBV, CMF, or I'm sorry, the Stotch isn't really giving me much there. The RSI, tad divergent. It was more divergent on lower time frames. But point is, this rally right here, I don't trust. I don't trust at all. I don't trust this candle even right here.
All right, so sounds like you're bearish long-term, bearish short-term, but perhaps neutral intermediate term.
It depends on how you define long-term.
Like weekly candles.
Yeah, weekly I am. However, I am keeping an open mind that once we retest these, look, if we go from here and we continue a rally without testing the support, it's not going to work. I'm telling you, we will not break resistance up here. We need to gather a little bit of steam. This is too rapid. There's just too much negative sentiment right now for me to believe this little rally going on. I think we need to gather down here, see some sideways action, some consolidation, and then rally up.
All right, so let's expand on the negative sentiment. What are you thinking from a fundamental perspective on taking technicals out of the equation? What are you thinking?
Well, let's go back to the weekly. So one difference between this market and the 2014 market is there was not this much attention on Bitcoin. This entire run up right here, this fifth leg, was the rest of the world becoming aware of Bitcoin. This does not counteract the rest of the world's awareness. It might tire them out, and once we do find a bottom, there'll be a lot of people disinterested. But all it's going to take is a break of 10K and a break of 20K to get this entire run up repeat on the way up, with probably an even steeper version of that.
Yeah, no, I mean, I agree with you there. I mean, I want to see, you see where your green downtrend line starts around 11,500 area, the 12, right? I would need to see that high broken, and then I think we're off to the races and sky's the limit.
So here's what I'm looking for. And I've been talking about this for months. While all these guys, when we rallied up here.
You wanna display your cloud parameters? Just double click on the cloud.
Yeah, I will. Give me 1 second. When we rallied here and rallied here, the entire freaking market was calling this correction over prematurely. My ultimate comfort, especially up here, we had every single Twitter trader saying, "Oh, we're bullish, buy."
Oh God, I was so bearish throughout that last bull run. It was like, I mean, it should have been embarrassing for everyone that called me an idiot for that entire month.
Yeah, there was a lot of well-known traders that I know are in very bad shape financially now because they went all in there. And in reality, this is a no trade zone for me. I don't open up positions in here until I see some solid confirmation. For instance, like a short position in here, but I wouldn't be opening up a long position. I'll sit it out. We had too many factors that canceled this rally right here. But my ultimate confirmation is the top of this cloud on the daily. When we break that, and you can see it's well below our symmetrical triangle here, that's what confirms for me that we are bullish. However, going over to the weekly, if we end up fully correcting down to where I think we will, which is approximately 4,300, that's if this doesn't hold. If I should disclose before everybody freaks out, if we come down, touch support, and begin another rally up, then we're going to hit the top of this symmetrical triangle. But it's got to be healthy. It can't be like the one we're seeing now. That doesn't mean we're bullish from there. We could still continue this down. If we get below this cloud on the weekly, then we have an entirely different situation. But for now, with the data I have in front of me and the current price action, I'm looking for a break at the top of that cloud before I say this entire downtrend is over and we can see the rest of the world FOMO.
It's a lot easier to do now than a month ago.
Yeah, most definitely, because we've actually let the price action settle and form. A lot of people completely forgot that we correct. I mean, in reality, it's been since 2014 since we've had like a real correction. You could count this in 2017, but that was just a corrective wave on the Elliots. It wasn't a full-on correction like we're seeing here.
All right. Well, what about just like sentiment in general, right? Like not factoring in technical analysis. Again, well, like you said, you're right. A lot more people are aware of Bitcoin, but what I've been saying is, I remember 2014. There was one Bitcoin that everyone knew there was one Bitcoin, and we were still making fun of altcoins back then, even though we thought that they may be useful. Now a lot of us know that they're totally useless, but yet they're still, Bitcoin is only 40% of the total crypto market cap versus 90% it was back then. Now I know the market cap doesn't really mean much, but in general, back in 2014, the average crypto person you randomly met was Bitcoin first, something else a distant second. Today, the average person you meet is something else first, Bitcoin maybe second.
Yeah, true. That's a very valid point. One thing about Bitcoin though, and if you've traded the 2014 market or anything prior to that, you understand that Bitcoin is very resilient. Bitcoin is altcoins' dad, it's king. Altcoins really cannot have any volume without Bitcoin. Everything is paired in Bitcoin until we get USD pairs. So when this correction is over, and I don't believe altcoins have anything to do with this correction, I just believe that we're at the end of a cycle and needed to correct, which is healthy and natural for markets to do, believe it or not. It's just more pronounced with Bitcoin because we're truly 24/7 markets. Anyway, beside the point, when Bitcoin does pull out of this correction, it's going to definitely pull its dominance back, and people will remember like who's in charge. And yeah, there's plenty of good alts out there. There's, as far as investing goes, that are very strong with very high market caps. But in the end, as for now, at the end of the day, Bitcoin is still their god, and it will continue to be once we're done with this correction, and people will, you know, stop talking about Bcash and things like that so much.
Yeah. No, I agree with that. I don't really need to pull up the daily chart. We kind of took care of that using the 12-hour chart. Let me throw my 4-hour chart up, and I know you like the 4-hour chart, so then we'll get yours up there as well.
Okay.
Let me jump over to here. Here's my 4-hour chart of Bitcoin, and you know, for me, it wasn't much. I mean, I like the fact that the 4-hour chart has been pretty good by trading the sequential system. And there was a 9 that followed a beautiful doji candle. Talked about it on this morning's show. You had a beautiful doji, then you followed with a 9. This would have been a nice little stab at a long position, but I think it's already starting to die out. Like, I would have wanted to see more momentum than that.
Yeah, I actually covered that same thing in my TradingView idea today. There was one, I believe, on the 6-hour too, which was a perfect 9. But yeah, it did open up a pretty solid position right there.
And I don't know, man. It looks like it's running out of steam slowly. Like if I did happen to catch this, I mean, I didn't trade it, but if I did catch this perfect 9, I'd probably be taking my profits here. And I would believe in this rally some more if you would go above the highs of 77.50, let's say. If we get above 77.50, then I'd say, hey, this has a chance to get back to 8,000. But right now, I would be getting nervous in that. Again, the CMF isn't helping at all right now.
Well, and if you throw, yeah, that's why you don't rely on one indicator. But if you also throw the Ichimoku up there, oh, by the way, I didn't share my settings on that. You'd asked me to do that.
That's okay.
Okay.
Well, when we go back to your charts, you'll pull them up.
Yep.
Yeah, and you showed the 1 hour, so I don't really need to.
Yeah, I just glanced over there real quick, but.
I mean, we can take some questions from the audience. I don't think we have anything more to say, or at least I don't. You have anything else, Nick?
This current rally scares me. I've said it multiple times already in TradingView Ideas and on here. Don't get caught in a bad position, guys. I know it appears very bullish, but it just, you know, if I'm wrong, I'm wrong. But this is just not healthy to me. We need to gather some more steam before we try these rapid rallies. Part of the problem is we have an inexperienced, overtraded, an inexperienced market that is overtrading. And this little BART pattern we're creating that everybody calls, everybody thinks it's algos and market makers screwing with them, but in reality, it's everybody that's trading this. This is retail traders over trading, getting over exuberant, and we're creating unsustainable patterns, and we end up falling out of it very hard. And then everybody that bought up here thinking we're bullish because of this gigantic rising wedge, for whatever reason they thought it was bullish, we end up falling out of it hard, and they close their position, end up losing money, and the panic ensues even worse. And we just keep repeating this BART pattern, which to me is just the market over trading. So this is why I believe we need to calm down gather more steam, to see a rally such as, I mean, this is a bad example, but such as this, we came up, we had a few bar patterns within it, but it's not as bad as the 5 or 6 that we've already had. I just think the market is over trading, over exuberant to see a bullish market, and when in reality, we still have a little bit more correcting to do.
All right, so we got a couple of questions. I'm gonna grab the 2 questions that came in with tips first.
Okay.
One of them had to do with traditional markets and options. Let's do that one second. So here's the first one. If the weekly RSI is reset in July, does that mean only way is up afterwards? My short answer is no, only because RSI is a terrible metric. And by reset, remember, the RSI should only be used in your trading when it leaves the overbought or oversold condition, not when it shows up in the overbought or oversold condition. So for the RSI to reset, it has to fall all the way to 30, assuming you're using parameters. And that's not going to be an easy task. I mean, in order for the RSI to get down to 30 in July, we are talking a price of like $3,000 per Bitcoin, right? The RSI has a chance to go down to 30 at a higher price of Bitcoin, but it would have to happen later on in the year. Like for the RSI to fall that quickly, the price has to fall really, really quickly. So, and
one thing on that, the RSI is useless on the weekly. I can't remember the time I've ever gotten a signal on the RSI with the weekly. It just...
Right, and I generally agree with you because it can stay overbought and oversold for an unreasonable amount of time on any time frame, really. So you really want to wait for it to get out of that condition. So I don't think that's going to happen in July unless Bitcoin has a catastrophic crash.
Also, one thing to note on the RSI and the Stoch, especially on like the weekly or the daily, is we make our strongest moves when the RSI and the Stoch is capped out. If you take a look here, I mean, we're capped here, we're capped here, and we just continue to go up. Look at these spikes. I mean,
right. Just look at when the RSI got into the overbought, and look what happened next.
Yeah, I mean, we went all the way up to 89.782 right there. This was at the top peak of our market, which makes a lot of sense, especially by RSI metrics. But in general, I just don't really pay attention to the RSI when it comes to like the weekly, nor the Stoch. I mean, you'll be able to spot a divergence long before on smaller time frames before you'll spot it on the weekly.
I mean, back in the 2014 market, the RSI went slightly into the oversold condition, and that was on the low of January 2015.
Right.
And it gave us a beautiful divergence with the secondary low that took place in August of 2015.
Where's August at? Yeah.
Right. And that versus the RSI that was in January of 2015. So yeah, I would not be using the RSI on a weekly scale for anything all that serious. I'm not really sure how to answer the other question, but the person did throw a tip in there, so I'll at least read it. It says, hey guys, on traditional market side, I was wondering what strategies you use when trading options. I've been on a smaller time frame, wondering your thoughts. Thanks again. So I have never traded options on anything other than weekly candles of the underlying price. Like the only candles that matter to me in my options trading is daily candles. Now I will, if I know I'm exiting on a certain day, I will go into lower candles to get out of those option trades, but I would not use options for leverage on short-term time frames because options have giant bid-ask spreads, and like they're not meant to be day traded. Options are instruments that are either long-term hedges, or you can speculate by using them for leverage, but you really want to hold your options for at least a week. So there's really no point to use any candles other than daily to time your option trades. I am now more of a spread trader that's direction neutral in a way, and I try to profit from, time and volatility and other things. But even if you do like bull call spreads or bear put spreads, where you are using options to as a spread, again, you want to use daily candles. Or if you're going to speculate with options, it's your choice. Do you want to go way out of the money to get that leverage, or do you want to get closer to the money to maximize your delta and gamma? I was more of a maximize your delta and gamma guy than gamble with, 20, 30 cent options, paying these giant premiums on those options on bid-ask spreads.
Hey, Tom, John Hill had asked, can you take a look at the 3-day chart? And it's interesting to me because I've been actually studying it the last couple of days because the 3-day chart has showed me some pretty neat things. I've got the 3-day pulled up now. Is my screen still on share?
It is. Oh yeah, I see a 9 right there.
Yeah, so we're at an 8, and then let's take 1, 2, 3. So in order to get a 9, we're going to need to close 75, 79 on the 3-day.
Well, yeah, you kind of get to close, but if you double click, you are using the latest version of my indicator, right?
Yep.
If you double click on it, or if you go to the settings of that indicator, or just double click on like one of the numbers, right? Uncheck disable setup 9 termination. So you do get that green arrow, which I like seeing. What that means is that at some point this candle was actually a 9.
Right. And it was. I mean, we could see it didn't have to break much. I mean, it had to.
Right, exactly.
Below this level right here puts us at a 9.
Exactly. So I do like seeing that. Yeah, no, it 3-day does look pretty good, and it may have the momentum looking at the 3-day chart to get you to that green line. But I think that's my absolute maximum on this thing. Either way, I would expect, I don't expect it to go straight up. I know every time it looks like it's going to go higher, and then you just get disappointed. I know one of these days it's actually going to break out, but I just don't think it's now, because I mean, look, people's lives were almost ruined in 2014 for being Bitcoiners, right? I honestly, I just don't think that the 2017 noobs are going to get away with it that easily.
You want to expand on that? What do you mean?
Well, what I mean is, like, the 2014 bear market really hit the economy of crypto hard. Like, it really hit us hard. And then being stuck in the $200 range for most of 2015, like I was able to hold out through the entire 14 bear market fine, because I had a very nice high-paying job from Wall Street. But when I quit that job in early 2015, being stuck at that low price of Bitcoin for 9 months in 2015 was not very healthy. Like, a lot of companies went under because of that. A lot of like mining companies went out of business. I mean, people were really second guessing Bitcoin, and that's how it finally bottomed and went to the upside. I just think it's almost healthy for that to happen.
Yeah, it is. Do you use the GMMA, the Guppy exponential moving averages?
I don't. I stick to the simple moving averages. I used to like my 20, 50, 200, but I've been using 730 and 50 lately.
Okay. Yeah, I'm about to do a tutorial on this, but it's been fairly useful lately on smaller time frames. Let me go back to this 3-day before we get off topic. The guy had asked about 3-day. Taking a look at our Stotch, I mean, we can see right there, it's fairly clear. There was a divergence on the OBV, but it's starting to fix itself. We do see heavy buy volume on the CMF. But so yeah, we've created a little bit of a overbought scenario on this last move. This needs to come down a little bit right here. The reason why I'm mentioning this now is because I pulled up the hourly earlier, smaller time frames. I'm on the 15-minute now, and didn't get into this, and I had meant to. But our CMF is showing heavy sell pressure. OBV's relatively fine. We do see a divergence on the Stotch here. starting around there, and RSI. So something to watch, guys. Anyway.
All right, so what I'm actually pulling up, since you mentioned the 3-day, right? Someone had asked me to compare the current bear market using the 3-day chart to the 2014 bear market using a weekly chart, because like I've been saying, we're falling kind of faster. So I finally decided, and I have them on my screen side by side, and I haven't looked at it yet. So I'm looking at it for the first time as well, and I want to see how similar they are as well between them, and where we could possibly be, because the current market is falling a little bit faster. So this makes it a little bit tough to compare. But if I look at the moving average crossovers, in the current market, the 30 period moving average crosses below the 50. So that took place here. Now the price couldn't get back above, couldn't test the 30. It has retested it. It's not a perfect scenario here. Let me maybe use a 5-day instead of a 3-day and see how that goes. I want to see if I can line them up a little bit better. Maybe 5-day would look interesting. Not sure it would, but we can try. I'm actually gonna. How do I drop some of these? Oops, not what I meant to do. Oh, I can't actually remove those.
Are you trying to change the chart on the right?
I'm trying to remove some that I'm not actually using yet. The 2 week is still, I wanted to leave that to be visible on my screen. That's all I kind of wanted to do. Yeah, so let's do this. Shoot, change the wrong one. That should still be weekly.
That's what I was asking.
This one should be the 5-day. There we go. Yeah, so if I compare something like this, no, I mean, there's still lots of similarities. I still think we're in this region here. I still think we're very, very close to that October region. We're coming back to the area of the secondary low that got us the lowest closing low was back in April. Our lowest closing low was also in April. And we're now coming back to test this low. And I don't think it's going to be pretty. I know we had a lower intraday low, which we didn't have back in 2014. But I'm going to trust the closing low, because it wasn't just one closing low. It was 1, 2, 3 lower closing lows than the prior dip. And here we had, about 6 lower closing lows. I know this is a 5-day candle and not a weekly candle, but the weekly was about the same. Yeah, I still think we're in this vicinity here. And if we start to approach the prior lows, which is 6,500, I think the bottom is going to drop out. Now, will there be 2 major breaks down like it was in 2014, or just 1? I have no idea. Let's see how it plays out. But I'm still expecting at least this move that we got back in September. And I am expecting it sometime in July this time. Yeah, this experiment didn't really go according to plan, but that's okay.
There's a lot of similarities from 2014, but nothing's going to be perfect. The structure is fairly similar, and a lot of the signals we're seeing are similar, but This is a different market with a lot more money in it and a lot more attention on it, which is why I'm on the fence on whether we'll break support on the symmetrical triangle or not. However, if we do end up breaking it, Tone, you got to have me back on the moment we break that, so we can talk about it.
Oh, the one where if we break 6,500?
The moment we break our symmetrical triangle, which is basically 6,800 or under.
Yeah, I don't know. I think it's going to be tricky, right? Because it's not about just breaking. It's about how it breaks. Like, this is what people don't understand about trading, right? Like, I can talk about symmetric and descending triangles all we can. Like, for example, the current break of the 50-week moving average had very little follow through, but that's because, in order for, we broke the 50-week moving average in 3 weeks, right? But look how much it had to move. It had to move from 10,000 down to 7,000. We fell, we fell 30% in 3 weeks, and it just didn't have enough momentum to follow through on the break of the 50-week moving average. Now, if we had taken, let's say 2 months in order to get to the 50-week moving average, then we could have went all the way down to 5,000 in a single candle. Because it's not always about the break of the 50, it's about how it does it. And I really, I hate seeing breaks of moving averages on, at the very end of an expanded range candle, because it rarely has follow through. You want the break to be at the beginning of the candle and closing at the low of that candle. And then it has a lot of follow through. So same thing on the triangles, right? Like, if you're breaking out of the triangle, like if we go back to the symmetric triangle for a second, let me exit full screen. If I go back to my symmetric triangle, right? If we break the bottom of this symmetric triangle, if we would have broken it, if we would have broken the symmetric triangle a week ago, I would have absolutely been calling for 6,500 support. But if we break this, if we do not get above 77.50, if this red line that I have holds, and then we get stuck between this red line and the bottom of the triangle, and then we start breaking below the triangle, now the chances of 6,500 holding the price are significantly smaller, because it has lots of momentum to the downside, and it didn't exhaust that momentum trying to get to the support level. And this is what a lot of people don't understand about trading. It's not always, it's not always so obvious that a pattern breaks. It's also how it breaks. You with me, Nick, on that?
Yeah, in a sense. I just, I could agree with portions of that, yeah.
All right, did you see the question from Alberto asking about OBV?
Yeah, I did. He was asking on the daily. Let me take a look at that myself, because I did not see what he was talking about on the daily. All right. So he had mentioned, let me scroll up to his question real quick.
I can read it too. I should probably read it for the audio listeners anyway. What are your thoughts on the daily OBV retesting the previous all-time high OBV? It seems to be a pattern going back to the Bitstamp chart. He doesn't give a time frame though, so I don't know.
Well, he said the daily.
Oh yeah, daily OBV. Sorry, he did.
So looking at it, I'm not sure what pattern he's talking about, because it's not really testing the all-time high. Right here, here's our OBV. I mean,
was that the all-time high though? Over 2014, it had to be, right? It had to be over.
Most definitely. That was our all-time high. Here's where we are currently.
Okay.
Here's something that's concerning to me also. So see, we're at equal levels here, actually slightly below it.
That's March. That's significantly lower prices.
Yeah, so this is another reason why
I remember March. That's that 1300 area. There was a double scare back in March. So one of them was Chinese regulators showing up at Chinese exchanges, dropped the price from about 1250 down to like or from like 1150 or something down to 760. And then the second scare was the ETF. I mean, I knew the SEC was not going to approve it, but people didn't think so. And that was a drop from about 1300 down to about 915. And I'm still waiting for that 1300 area to be retested. And I wouldn't be surprised if it does.
You're still waiting for what area to be retested?
1300, 2013 all-time highs were never properly back tested.
Yeah, I remember that actually that when we started crossing 4 or 5K, I was a bit concerned about it myself. But at this point, I mean, if we test those levels, then we can just kiss everything goodbye.
Not necessarily, right? I still have hope. Again, it's how it tests it, right? Like, for example, if the price of Bitcoin crashes from 3,000 down to 1,300, but it's back to 3,000 within a week, I think it's perfectly okay.
Yeah.
Now, if we get stuck at 1,300 for a week, then we got a big problem.
Yeah, for sure. I think we have a problem anyway at this point if we break below 3K. Really, I mean, anything around there, that's a general number, but I think we're in some real trouble at that point. But back to the OBV, if we take a look, first touch, we're fairly high, second touch, we're high, and now third touch, we're even lower on the OBV, but higher on the price. This general sell-off and the lack of buyers concerns me, and that's why I'm being cautious as we sit on support, because this is very low, guys. I mean, we're talking some very, very low buying activity. I mean, in general, the CMF is not going to measure that. The OBV will. But if you pull up like Bitfinex, for instance, the OBV does look a little bit different. I should disclose. But then again, I'm under the impression Bitfinex has a lot of fake volume. And that's why I'll typically start with Bitstamp to chart. But to answer the guy's question, I don't know what pattern you're talking about testing the all-time high on the daily with the OBV, because I don't see it. We're just at really an all-time low right here. Pretty damn close to it. Nothing more on that. Did I lose you?
No. I'm still here. I'm looking at the live chat. Yeah, I don't really see any other questions. So we've gone for about an hour. I mean, unless you have, we can probably start to end it here. If you have anything else to add, now is probably the time.
I mean, I could ramble on the dangers of this rally that we're seeing, but hopefully most of you get the point. It's yeah, just be cautious on any kind of long positions right here. I still feel we need to come back down and try this again a little bit slower. And you know, I'm not ruling out a rally here, but at the same time, there's some very heavy bearish data on Bitcoin on higher time frames that I can't ignore. We are starting to see a few bullish signals emerge, which I had covered throughout these on my trading view. But in general, there's too many sell signals. On top of that, I don't know if anybody ever takes a look at this. I really don't care too much about it, but if we go over to their little trading views, little technicals setup they have, I mean, the signals are there. This is just the best way for me to summarize it for you guys what I'm talking about.
Oh, so these are like the general Bitcoin technicals, overall gauges?
Yeah, so here's the weekly, and what we're looking at here is the summary of our oscillators and moving averages. We can both see that there's very few buy signals. There's 5 on the moving averages, but in general, we're pretty bearish. Now, again, this is an algo. There's still things that it can't measure, and our oscillators on the daily are showing buy. Our moving averages are showing strong sell. I'm just being cautious as we sit here on support. But on that note, Bitcoin's not over, guys. Even if we do end up correcting all the way down, there's still some very good things fundamentally that will keep us alive, and we'll rally out of this harder than we've ever have. Taking a look at the monthly, I mean, we're strung buy and buys all the way across. I don't know how much I believe that, but in general, my point is, even if we do end up correcting all the way down further from here, it's no need to give up on Bitcoin.
All right, cool. All right, Nick. So since you still have screen share, anything else you want to promote besides your trading view? Go for it.
Yeah, sure. So besides my Twitter, which most of you follow, I also have a paid group that is free. It's right here on so it's not really a paid group. It's more of a joke. The content we provide in it is typically paid content, same as some of the stuff down here that I provide on my trading view. But if you go click the top of my trading view right there, that little link, it'll take you into our Discord. I will be in there this evening in the voice chat, where it's basically an open Q&A similar to what we're doing here, just no screen share, and you guys can talk or you can type. It's up to you, but we have a number of chartists there, including myself, to answer questions. We do everything from discuss TA and current price action to actual trading to discussing whatever the hell we feel like, food, just talking smack to each other, whatever. But it's a very good environment. I do suggest you join it there. It's there or on the top of my Twitter. Yeah, it's a good environment to come learn and socialize with people instead of trolling in the YouTube chat.
Yeah, and your Twitter is right there, right next to it. And all of these links are also in my YouTube video description.
Yep. Thank you very much for that, Tom. I appreciate it.
Yeah, no problem. All right, guys. And once again, thank you for hanging out with me on my channel. Also, go over to tonebase.com. I'm on my affiliates page. So if you like my work and you want to support my work and you're going to use any of the products I have on my affiliate page, please go ahead and go through my links. Other than that, if you want to learn the basics of trading and technical analysis, check out one of my workshops. We just added Boston on August 4th. Other than that, I'll be in Dublin this Saturday, so check that out. Nick, you've sat through one of those down in Miami. So yeah, I thought it was a good one.
I thought it was a great one. And I was just in chat a couple of days ago with some people, some traders, and we were discussing the TD and the fact that you're going to the UK. One of these individuals was in the UK. And I had mentioned, I do believe the workshop is actually very informative and much better than watching a YouTube video. So yeah, I can attest to his workshops are very good.
Awesome, thank you. All right, guys. On this note, back to my homepage. On this note, we are gonna call it a night here. And good luck trading. And thank you for hanging in there with us.
See you guys.